Hello and welcome back. My name is Jalen West and I'm the Senior Marketing Manager here at PPR Capital Management. Today I'm sitting down with Craig Johnson, our Chief Asset Officer, responsible for overseeing and implementing investment strategy here at the firm. Today we're taking a look inside of our opportunity fund, backed by real estate but it also offers a high growth private equity opportunity for our investors. Thank you for joining me today, Craig.
Thank you.
All right, cool. So I want to start off with big picture here. From your perspective, what makes the car wash industry compelling for PPR right now, and why did we choose to enter this space at this stage in the market cycle?
Yeah, absolutely. So I think it's honestly a great time to invest in car washes, and I think that's true on the demand side, the supply side, and the barriers to entry side. From a demand standpoint, obviously, I think everyone knows by now. We've talked about it enough that at home driveway washing is kind of a fossil now. It's a way of the past. Back in the 90s, it was over half the country would wash their cars most typically in their driveway, and that number is now down, far below 20% and still falling. And so there's just a lot of opportunity where, previously this was looked at more of as a luxury. People would maybe, if they needed their car especially clean for something, they'd go to a wash or something like that. But typically the baseline was you washed at home. But these days, it's more of a necessity, right? There's a whole generation of people now that have grown up with, washing their car in a facility as kind of just the default option. And so, no matter what happens, there's always going to be that strong, steady demand. But on the supply side, with infill development and as car washes have gotten more popular, it's getting harder and harder to do greenfield site development or ground up site development in the car wash industry, especially with permitting and stuff like that. It's just very difficult to get approval for new washes to go in. So if you can get those approvals, like we have in the Opportunity Fund, it's just a great opportunity to build something that can't really be challenged by a lot of competitors in a great location that should drive revenues and profits for years to come.
It sounds like overall there's a relatively higher barrier to entry with permitting and getting these greenfields approved. In an industry where consumers are moving towards this automated model that the Tommy's offers,
Yep.
which is perfect kind of for the Opportunity Fund. Now, a key component to this whole endeavor is our partners. So we have Olympus Pines and we have Tommy's Express. Can you talk a little bit about what they bring to the table and why these particular partners in this deal?
Yeah, absolutely. So I'll start with Tommy's there because I think the franchise model is one of the keys to the Opportunity Fund as a whole. What I always say is the car wash industry is kind of a last bastion of the old mom and pop America because, if you go back, 30, 40, 50 years now, you would see lots of industries like, convenience stores, gas stations, things like that, that would be one-off, just owned by a family business. And you just don't see that anymore, right? They've all been taken out kind of pretty much across the country, for better or for worse. But these days, the median number of washes owned by any individual car wash owner is still one, right? 70% of people only own just their one car wash. It is still a family business. And so when you're looking at, what has happened to all those other industries, and you're talking about things like fast food restaurants, you're talking about pharmacies or gas stations, those all went to the franchise model pretty much, right? I mean, you're looking at your CVS and Walgreens dominating the pharmacy space. And, why does stuff like that happen? It's because you're talking about a very relatively homogenous product, right? CVS or Walgreens might give you better service, just like Tommy's will give you better service than, a competitor car wash. But, by and large, you're actually going for just a car wash, just like at CVS and Walgreens, you're going to get your medication or pick up, something. But what has happened across the industry in pharmacies is that that's been just massive nationwide consolidation. It's been the same thing with car washes, in the past, that they've been that kind of single-owned industry. But going forward into the future, we think that Tommy's and that franchise model will take over, and it's an opportunity for our investors to get into the ground floor of the next CVS or the next Starbucks. And as far as Olympus Pines in particular, we think that they have a long track record of operating car washes. They're the largest individual franchisee of Tommy's, and Tommy's is the largest franchisor of the entire car wash industry. So kind of being, in business with the best of the best is what we look for here at PPR, and we think it's a great opportunity for both ourselves and our investors to grow wealth sustainably and get, a little bit higher upside on the returns down the road.
It sounds like car washes are kind of the last frontier for this consolidation via the franchise model, and we partner ourselves with the largest franchisee in the largest franchisor network,
Yep.
kind of hedging our bet a little bit there, which is great. Now let's look at this from the investor's perspective. If I'm taking a look at the opportunity fund as an investor, what makes this fund different when you compare to other private equity opportunities that are out there?
Yeah, I think what's unique here is we've really tried to stay true to our roots with kind of the real estate focus, but also offer that private equity operating business style returns. I think it could have been a lot easier to just do a triple net lease portfolio, do a fund like that, or just have a fund of operating operating businesses. But we were trying to give our investors the best of both worlds, right? On the one hand, you are looking at a portfolio of operating businesses that will drive EBITDA growth. We are looking to exit at a pretty competitive multiple down the road. And that offers a lot of good upside to the investors, right? We're targeting an 18% return plus, but all the way up to a 26. And there's, obviously a lot of upside down the road, depending on how the sites perform and how the industry reacts to this portfolio of car wash investments. But, we also wanted to focus on the fact that, our bread and butter is real estate, and we love that downside protection for our investors of owning just pure real estate. So we didn't want to triple net it and sell those properties off. We wanted to hold them, and those are still inside the fund. And so when we model it out as the worst case scenario where maybe this platform doesn't work out, or the Tommy's just doesn't take off, and you end up having to sell these washes not as part of this portfolio, this great franchise model that we're really confident in, but just as these individual washes, the returns just from that would be sufficient to still pay investors their equity back and their preferred return. And so that's what really attracts us to this product, and what we hope attracts investors is the combination of the downside protection of a real estate investment, but with the upside that you more commonly see in a PE, or venture capital style investment.
And it kind of blends what a lot of our investors are looking for. That stable asset backed by real estate, which we own the sites.
Yep.
But it also provides that cash flow opportunity and potential windfall when the exit comes, which is pretty exciting. And it sounds like the industry is heating up even more, so the exit could even swing even higher.
Yeah, absolutely.
Which is great. Now, speaking about the exit, looking ahead, 5 to 7 years, what can investors expect when the exit time comes, and what kind of opportunities are out there for the fund in terms of exit partners?
Yeah, absolutely. I think we are focusing obviously on a bulk exit across the entire platform, right? So PPR partnering with Olympus, they're obviously going to have, they currently have about 20, 25 sites up and operating, but the plan is to have up to 70 operating with more in development at time of the sale there. And the goal for that is simple, is go to the large Wall Street PE firms and do a bulk sale of the entire portfolio all at once. And just to kind of explain the reasoning behind that, you've seen a lot of acquisitions over the past 5-6 years, been a little bit of a craze around car washes on Wall Street. And recently, we've gotten feedback from a couple of investors that multiples have been maybe not the 16, 20, 25 that we were looking for, maybe more in that low teens range. But the reason for that is a heterogeneous product. One thing that people have learned is that even though the sector does look prime for aggregation, like I was mentioning earlier, is it's not as simple as just going to every mom and pop car wash in the country and just buying them all and packaging them in one big portfolio and selling it to Wall Street. That sounds very attractive, but what it actually works out to is you've got 50 car washes that have 40 different floor plans, 50 different types of equipment, different detergents being used, different advertising bases, different subscription softwares. It just does not mesh well. And if you're a PE company on Wall Street, you're not looking to acquire car washes. They don't want to acquire anything particularly. They want to acquire safe cash flows, put their money to work, earning more money for themselves. And so we think, the value of Tommy's and Olympus and this whole platform exit that we're looking to optimize over the next 5 to 7 years is that's exactly what we can provide, right? They'll all be built to identical floor plans. They'll all use identical equipment. The maintenance staff will be there. The software will be in place. The license plate tracking technology, everything about the entire portfolio will be homogenous, just one flat product. And we can take that to Wall Street and say, if you guys put your investment, put your money into that, the Olympus team can stay on and run the investments after the acquisition happens. So all they have to do, if you're a PE firm, is just deploy the money, sit back, and just watch the profits flow in, kind of a fire and forget for them. And that is, a very attractive proposition for an operating business, and one that'll set us apart from a lot of our competitors out there looking for PE exits.
It sounds like it's not just one component that makes this an attractive package when it comes time to sell. It's really everything, from the partner to the sites to the vertically integrated model that Tommy's offers, which hopefully when we get there, will give us an exit that makes our investors happy.
Very exciting.
Yeah, I think very exciting. So thank you for watching another update from PPR Capital Management. My name is Jalen West. I'm the Senior Marketing Manager here at the firm. If you're interested in learning more, feel free to subscribe to our bi-weekly newsletter or speak with one of our investor relations staff members. Thank you for watching.